Hello everyone, just doing a quick call with a teammate and we're going to look at how to place a trade on your phone on MT4 and also a little look, if we've got time, at TradingView, just some basics on how to expand and contract the chart, zoom in, zoom out, and a look at one of the strategies we use called BYOB, Be Your Own Bank, where we wanted to just have a look at how we put a stop loss on that. So without further ado, let's get started sharing screen.
As well as the take profit too.
And the take profit, yeah. Okay. So I'm going to look today, this is MT4, and here is a trade that is going. This, I'm using a slightly different strategy from BYOB, but for the purposes of placing a trade, I'm just going to say to Laurie what she needs to do. So, and then, so we'll divide it into chunks. So I'm not going to overlay the BYOB indicators and do the full analysis. I use pitchforks off the Harmonic scanner. We just look at charts in slightly different ways to achieve the same purpose. So the first thing we do is come to the menu on the left. I'm on the 1 minute chart. When Laurie takes a trade, she may be on the 5 minute, the 15 minute, shorter time frames, or we use the hourly. So we come over to the left. I enter on the 1 minute because I like to use very small stop loss for my trades, and I trade between levels. So on the left, under this little series of bars, I don't know what it's called, you've got a long position, which means a buy, and a short position for a sell. So you click on this. In this case, we want to put on the long position. And then this red box would be where Laurie wants to work out her stop loss. I use pitchforks for that level. So I'd want my stop loss down here. It's a USD JPY pair. I like, if I can, to always work to a 10 pip stop loss. Don't know if I can on this because it's just price has moved up above. But for the purposes of demonstration, I'll just put it there to about 14 pips. I like to cover quarter theory as well. So that's a bit too big a stop loss. I wouldn't be taking a trade. So you kind of make your own decisions according to your strategy and your confirmation checklist about your risk to reward. Because I like to have a 1 to 2, so I'm risking 10 pips to gain 20. So these are the things you learn as you go along. And then we're looking for this level up here, a pitchfork. So whenever you get into a trade, you want to be thinking about, where's my take profit zone? How am I going to work that out? Where am I thinking, according to where price moves, I'm going to get out of the trade? And the other thing that we like to do, or I like to do, is get a horizontal line, grab that and put it at 1 pip past entry, so that when price has moved 10 pips, I may only be aiming for 10 pips a day, 5 or 10 pips, and I'm out the trade. That might be Laurie's strategy on BYOB, absolutely fine. If you're aiming for 20 pips or more, then once price has pushed up to 10 pips, which is your 1-to-1 risk to reward ratio, 10 pip stop loss, 10 pip gain, if you put then a stop profit in other words, at 1 pip profit, you're covering yourself mostly on your broker's spread and commission. And if you do have price reverse on you and get stopped out of the trade, no harm done. You live to fight another day without having taken a loss. So that's the kind of thinking. So Laurie, I'm now going to go over to my MT4 on JFX, which is a demo account. And we're going to find on the left-hand menu USD JPY. Which I can't now see. See if I can, I haven't got it up there, have I either?
Yes, you do. It's 1, 2, 3, 4, 5 down.
Oh, thank you. So come over to that. It says at the moment, red arrow, it's selling. But let's just, before we do that, what you can do is press your left mouse down. Now, Laurie's trading on the phone. I'm trading on the computer for the purposes of demonstration. So come over.
I'll be pressing trade.
Yeah. So open your chart for USD JPY. I'm on the one. Okay. Open the chart so you can see what price is actually doing. Now, I like to keep the PSARs, the SAR flip on mine, which is a setting I can show people the other day. It's an indicator. So when I see that SAR flip above, I know that's acting as a ceiling, pushing price down. So if I'm in this for a buy, I might not get into this trade until the SAR flip shows me it's come underneath as a floor and is pulling it up, because you're then going to get anxious. You're going to be in drawdown, even though you've looked at your trading view chart and seen that the trend is up. Now, I haven't really done a full analysis on that pair. I picked one because at the moment there's a lot of USD Canadian news this afternoon. There's non-farm payroll on Friday. The markets are getting a bit constipated. So I'm not sure whether this is going to be a successful trade. It's for the purposes of demo to show us how to do it. I rather hoped I'd picked one out of all the lot that I looked at that might actually do what I hoped it would do, and we'd have a win. But whatever. At the moment, it's coming back. It's half past the hour. So this is where I would look at the close of the 30-minute candle as well to see where the wicks are before getting into a trade. Now, this orange line is called the 62 EMA. On BYOB, Laurie will be using the 20 EMA. If you remember, Laurie, the red and green line that runs along the middle of the river. Very, very similar to this orange line. And where I use pitchforks, particularly the extensions, they are very similar to Bollinger Bands. They'll ping price back in. Remember how we talk about the children in the house, they run out in the garden to the fences, and then it pings price back in. So as I say, we talk a slightly different language, or we're using a slightly different strategy, but we're looking at charts a slightly different way, but we're all, looking at the similar sort of thing. So if price comes down and tests Laurie's 20 EMA, or my, in this case, 62 EMA, and then comes back up, all it's doing is testing things, and that's how price moves. It moves in patterns, it moves to levels, and it repeats those patterns across time frames as well. So what's happening on the 1 minute time frame will be looking like right up close to every wrinkle, and then the same thing is radiating out across the 5 minute, 15 minute, 30 minute, hourly, etc., etc. So it depends on what type of trader you are. So once we've got it on the chart, here we've got sell and the buy. The difference between what it will cost you is called the spread. So if we're going in on a buy, then that is the ask price. So 108.69 and 9 and 106.93 for the sell, which is the bid. I think that's the right way around. I get a bit dyslexic about that. So that's why you get a broker's spread and commission. So whenever you enter a trade, it'll always come up with a minus, like a minus 1.7 or a minus whatever, and different pairs have different spreads and commissions, because that's the broker we are paying to place the trade onto the market. That's how they make their money. So you'll always start, it's like handicapping a horse with extra weights in the race. And each pair has a different lot size, and we use my FX book to work out the lot size according to your account size and the currency pair. So once we've decided to get into the trade, we then come over to the pair on the left, right click it, and open new order. And that brings up this window. So double check you've got the correct pair you want to trade. At the top is USD JPY. Now the volume will be your lot size, and this will depend on your account size. So 0.01 is going to be 10 cents, 1.00 is $10, and 0.1 will be, it's not giving me 0.1, 0.1 would be $1, and then you can have multiples thereof. So I've got this is a demo account. I've got a balance in it of $2,600. So if I clicked on $80 lot size, 8.0, that's $10 a pip, then it probably wouldn't let me take the trade. It would say no, not enough money in the account, because you probably need a $10,000 account. So what we'll do, I haven't got time today to show my FX book, but let's say we thought, okay, then we'll risk $10. So here, 5, and then stop loss. We said. Now I use I use a slightly different trading account, so mine lets me do this in pips. So I want 15 pips off current price on the buy. So I could come back to TradingView to look at that. 714. We don't bother with that tiny little point at the end. It's to the right of the decimal point. It's called the pipette. And Laurie, I can let you have a copy of this recording as well. So that's 108.71. So if we wanted to do 15 pips less, in fact, I think I'm going to come out of that and show you on TradingView. So current price 108.672 is down here. 108.670 is our current price. And then the slider bar will tell us if we wanted 10 pips stop loss, it's in red. So I write down on a bit of paper 108.556 is going to be my 10 pip stop loss. And then take profit at 20 is going to be something like 108.863. But depending on the Bollinger Bands or where the pips, where price action is either side of that moving average that Laurie has as set as 20, it'll be the gap between that and your Bollinger Bands, which will show you potentially how much profit that you've got. So it's always looking at the next level or price coming down to that moving average. We'll show that in a markup in a minute. So now I've written those figures down and I want to get into this for a buy. I come back to my trading platform. I click on the pair. I want to risk 0.05 and my stop loss, I'm going to type this in 108.556 and take profit at 20 pips at 108.863. Now, depending on how price is moving, and I know with BYOB we go for the 10 pips a day club. You could just put your 10 pips in there. You could put 5 pips in there to be safe. I manually like to come back over and adjust it because obviously you can stretch. If you can see it's got a strong momentum either way and you can stretch that money, then why wouldn't you want to do that? I'm not a great fan of saying I'll close half and let the rest to run, because I think either you believe in the trade or you don't. So you've left money on the table if you've closed half of it. So personally, I just close everything out. So this is what we call market execution. We don't want a pending order. Now, pending order, there are different types. We won't go into that today, but they delay you getting into a trade until it hits a certain point. So in this case, we're doing our business now. We don't want the red one, we're buying, so we want the blue one. So we click that, it's popped, I can hear the noise, and I'm in the trade. And you see it starts off at minus 0.9, partly because it was going down, but also that's your broker's spread and commission. It will always start with a minus. And then we look at the bottom here, and we can see it says buy, so we know we did it correctly. Sometimes I've made a mistake and I've gone into a sell instead of a buy, so always double check. That's why I always write down on a piece of paper the figures, and I even tick them off and I double check I've entered the right figures, because sometimes you're typing it in and you put the decimal point in the wrong place or whatever. So particularly if you get tired or you've done a bit of trading, your mind gets a bit tired, you know, it's quite easy to make a mistake. So price 108.709 we got in at, stop loss 108.556, and take profit at 108.863. All that is correct. The commission that's being charged is 0.2, and profit at the moment is minus 156 net profit, but minus 1.76 because that 0.2 is the broker's spread and commission where they're making their money. That's why there's a difference between that bold figure and the profit net to you, or in this case, we're at minus 4 pips. This is the pip counter here. So the other thing we can do is oh, I've forgotten how to do it up here. So you don't have to be on the 1 minute. I've just gone up here and clicked on the 5 minute, and I can look on the 15 minute. Now I like the 15 minute a bit better because it's showing over slightly longer time frame that the SARs are underneath and it's pushing price up. So sometimes when we're on the BYOB live sessions, we're looking at setups, and that's why we look for something called confluence. We like to see that what's happening on the 5 or 15 minute is also happening on the hour, because that says the trend is strong, and the trend is the same across, like ripples on an ocean, the trend is the same across the time frames. If it said buy on the 5 minute and then on the 1 hour it was showing a strong sell, that might stop you wanting to get into a trade unless you just took 3 to 5 pips very quickly. Okay, so you kind of have to think about those things when you're getting into a trade, because the length of time you're in a trade can affect your profitability. So I'm just going to see what it says on the hourly, and the hourly says it's turned round for the sell, and the 30-minute says it's pushing up still. So there's kind of like, it's kind of range, what we call ranging. It's not doing very much. As I say, this isn't a properly analyzed trade. It's just to look at how to actually take a trade. And then if we come back and look at it where we do all our chart analysis, which is TradingView, we can see indeed, you know, we're minus 4 pips. So that's, you know, you can see it's coming down. But I'm saying to myself on my analysis, and I'll put BYOB on now. I'll go to the 5 minute to do that. I'm thinking, okay, we've still got an upward trend. It's still above my pitchfork. I'll take off that pink line as well, because that was just to show where we put a stop profit in. So what I'm going to do now is see if I can find my indicator. If not, let's see, Bollinger. What does that do? So now I need to move that up. No. Move pane up. Trying to get it on my maximize. Move pane down. I'm not sure why I'm not getting it on that particular window. More. Move to existing pane above. Try again. Move to existing pane above. There we are. So that's put. Now I might be using a slightly different indicator. It might be, I don't think it's out of date, but we've got an indicator plus and all that kind of thing. So it will be similar. It'll be broadly similar, except I see, oh, I have to take off my, let me take off my stuff. Take that one off, take that one off, take that off. Fade that out. Then we're just using, because as I said, it's different indicators for different strategies. Don't mix your, you can put quarter theory on, but don't mix strategies generally, because you just get analysis paralysis. So, okay, so I'm on the 5 minute. These are Bollinger Bands, so price will always come out to the edge of these. So you can see here, it only came back. I know I've got a purple line in the middle, Laurie, and that's changed to green and red. So I know it's slightly different, but just for the purposes of the demonstration, you'll be looking, you've got even more confirmation. Now I need to update these if I'm teaching them, because that will now have green and red down the middle of that spine. But that is our EMA, our moving average. So when price drops below it, let's see if I can, let's get into some more analysis on this. So here's our slider. I always put that on when I'm in a trade, and we're now getting into profit because it's in the green bar. And price, here's our SARS. It said buy there actually, which I didn't know. And so our stop loss would be below the previous lows. You put your stop loss at least below the previous low, or as much room as you think you need to give it to breathe. So your stop loss should be a minimum of, and I'm only on the 5 minutes. So if you're on the bigger time frames, you will need a bigger stop loss. That's how it works. So that is our previous. So say a few pips below the previous low because we're in a buy. So 108,584, which would be about 8 pips. So similar to what I chose, similar, but that is quite a tight stop loss. But that's on the doji candle, which is the spinning top. It's an indecision candle. You can see, you know, this is how you learn to read it. The sell candle, big long wick, it wicked off that. Doji candle, price can't make its mind up. I'm not on Heikinashi, but on Heikinashi, look for the strong flat bottom, and then it's stalled out. And sure enough, here's the buy. Your SAR flip is underneath, which is parabolic support and resistance. It's acting like a floor, it's acting like support, pushing price up, and then it hit the moving average. So you could have, if you had got in there, put your stop loss there. If you hadn't got in till it said green buy, then, and you thought, okay, I'm not going to risk trying to see if it'll go above my moving average, you would have taken your profit at the moving average at 5 or 6 pips, say 5 pips net profit to you after broker spread and commission. And that'd be a perfectly acceptable way to start off getting more confidence on pushing the button and taking trades. So on a buy, stop loss below the previous low, give it a tiny bit of padding, or above the previous high for a sell. Get in when the arrow has turned to green for buy, and get out when when you've hit 3 to 5 pips and price has hit your spine running down the middle, because that's your moving average. And yes, price should work its way out to the Bollinger Bands, but it depends how much you swing it, because you can see now price flows. See how price flows like a river. It flows, it does different things in different sessions. USD, we've got red news this afternoon. We've just had red news. JPY is an Asian session pair, Tokyo, all these things. USD, JPY, it moves at about a 6. It's quite a nice pair, so it's not very slow. It's not hugely crazy fast like the GBP pairs. All these things might influence you on when you decide to get out of a trade. Or you can say to yourself, I'm prepared to risk that 8 pips money, and I'm going to see how far it will go. I appreciate that I'm going to look at red flag news, but that it may swing back and forth. But as soon as you see it start to consolidate in a range, I mean, this one does move quite well. Another thing that I find helpful is to have these session pairs at the top. Green for Tokyo, yellow for London, blue for New York. So USD makes one pair is a hot pair. It's a New York session. JPY is Asian, everyone's asleep. So what moves did we have? Well, we didn't have so much in London until the end of London. And then it made that big move down. And now it's making another move up. And there was news a bit earlier on. So is it calming down? Is it now saying I'm having a little rest? You know, an hour either side of red flag news, you might want to, well, not you might, you shouldn't trade, as we know, it's one of our rules. So you have to kind of put these nuances on, but stop loss, as simple as that. Personally, I don't think I ever work to less than a 10 pip stop loss, and I like to have some barriers between me and being taken out if it reverses on me. So, but it depends on how much money you're prepared to risk, because your safe zone is beyond the Bollinger Bands. Of course it would be, because that's the elastic that pings price back in. And even there, you can see this pair went outside when it dropped suddenly. But you know, that's a big stop loss as well, 17 pips to just gain 5 or 10. So where are you looking to stay into it? Well, if you stay into it to the edge of the Bollinger Band, there's 16. So you know, you want to say to yourself, well, I want to be safe. That's my median line. But when the SARs turn, that's when you might want to get out of a trade as soon as you see it turn. So you might have got 8 pips there. And then where would we have got in? So we've only just got in really. So once it, but the SARs have now flipped. So that's a bit of a problem because it's now saying it's pushing price down. So it's just ranging a bit. I mean, as I say, we didn't do a lot of proper analysis on this. If we'd been in further back at that buy signal, then that strong, nice engulfing candle, buy candle, and that would have got you, if you didn't manage to catch the small candle, but you caught the beginning of that big blue one on the 5 minute, there's 2 pips. Then it did a small one, but notice it wicked directly off that little purple EMA. So that held it, that held price going up. So that's okay, you wouldn't have minded that little reversal. And then if you'd gotten out of this second one, that's 4.3 pips. And if you said, well, do you know what, that's got a flat bottom candle, it's not a very big one, but it's not too bad, I'll see if I can push it a bit more, then there's 5 pips there before it turned on the next one. Yeah? See what we're saying on that? Does that make sense? I know it's a bit fast. We can go through it again, but you know, at some point. So here, a buy, but the candles aren't very big. So that might stop you getting in. You know, you can think to yourself, there's not a lot of volume in that. So here it said sell. It said sell there, and you would have put your stop loss just where it's very near that Bollinger Band, those previous highs. So you're still in the trade, but you're in a bit of drawdown. It's still under the PSARs, under the SARs. So you're saying, I'm okay. Then it starts to drop. Then it comes below your moving average and a very nice drop down. But where do you get out of the trade? You know, because it doesn't tell you really to get out of the trade until you get that SAR flip there. In the meantime, you could have lost all those pips back. So I think that's where you have to decide. Your stop loss would have been, if you got in there, you would have had a stop loss of can't get it to hook onto it. Maybe if I turn the magnet off, that might help. Say you did manage to get in on that one. So you would have had a stop loss of, I probably would round up to 10 pips myself. I would have a minimum of 10 pips stop loss on these trades, but as I said, I don't often trade it myself. And then in terms of money you would have made, you would have had drawdown of, you would have suffered drawdown of 4.2, so you've got to sit there worrying about that, but you still know you're under the SARs and all the rest of it. And not a lot of wax on the candles, but you did have a big drop there. It's just consolidating along in London to the end of the London session. The SARs are still on top. That's keeping you safe. And then from that green candle you got in on down to there, but you wouldn't have got the full move. No one ever gets a lot of people walk away with nothing because they're not prepared to accept 70 or 80% of the move. And that's a quote from a multi-million-dollar trader. So don't beat yourself up that you don't get the full 27 pips. You've only got a 10 pip stop loss. So personally, I'd say I'd like to get 10, which would have got you to the edge of that Bollinger Band. You see it where the green candle and the little blue and the doji is? 1-to-1, 10 pips, get out the trade. That's what I would do to start off. If you then get more practiced at it and you prepare to suffer a bit of down back to 6 pips, but you're still under the SARs, then you could swing it down. But even then, I'd be saying to myself, there's that doji green candle. I'd be out the trade there at 15 to 20 pips because of that doji candle. Yeah, because you don't know it's going to turn on you. Not do that. Yeah. So that's how to do it. And then the last few minutes to show you how to size the screen. Now I've got my mouse. Can you see my mouse, the cursor on the screen?
Mm-hmm.
move to the right hand menu and it changes. I'm not touching, I've got my hand on the mouse, but I'm not pushing anything. It changes to a double-ended arrow. And that shows you now I've pressed the left-hand side of my mouse, and that is compressing the screen. And I've still got my finger held down on the left-hand side of the mouse, and I can expand it up. And down here, you use these, the minus to compress it, and the plus to expand. And then I come up here, if I come to the hourly, it goes all weird on me. I can't see what I'm doing. So I immediately come to the screen. I compress left-hand side of the mouse. My finger's pressing the left-hand side down. I then put my cursor back on the screen and I drag the chart up. I'm dragging the chart with my with my finger on the left-hand side of the mouse. Then I think, well, that's looking a bit better. I can see what I'm doing, but it's still a bit, I still prefer it a bit in the middle. So I come over here, compress a bit more. I do that. And then I think, well, I want to zoom in to show people. So I've pressed the plus button at the bottom. The plus button will do that. The minus button does that, compresses it right up. Plus button does that. We want to zoom in, click, click, click. Come back onto the screen and say, oh yeah, that's fine. Still a bit small, back over here. I think, no, too big. There we are. That's about right. See what I mean? That makes sense?
Yes.
Sorry, I know I'm talking quite fast. So
No, that's okay. No, that's okay. This definitely I understand. The other, I'll go, just go back and rewatch it again.
I'll just stop recording.